Hi everyone, this is Bharadwaj and a very warm welcome to this debit credit. And this video in this debit credit will deal about and deals with funds flow statement. Funds flow. Now we are going to discuss about funds flow. When we are going to discuss about funds flow, first we will have a doubt. What is? What is? Now let us see what is flow. A flow is nothing but a movement. A movement can be inwards and outwards. So, flow means a movement which can be inwards or outwards. Then what is funds flow? Funds flow means flow of funds. That means maybe how the funds are coming into the business and how the funds are going out of the business. It is a flow of funds in an organization. Now the question comes, what are funds? Funds అంటే ఏంటి? Funds are nothing but money values and which can be cash or time. And these funds are two types, long term and short term. They can be long term funds or short term funds. Now the question arises, when funds flow? When funds flow occurs? When means the funds flow will occur only and when a transaction is between a current and non-current item occurs. In simple, see, current asset, current liability, non-current asset and non-current liability. If it is a transaction between a current asset and a non-current liability, then funds will flow. Yes. It is a transaction between current liability and a non-current asset, then funds will flow. Yes. If it is a transaction between current asset and a non-current asset, then it is also yes, funds will flow. In the same manner, current liability to non-current liability, yes. Now the question arises, when the funds won't flow? When it is a transaction between non-current asset and a non-current liability, that means two are non-currents here, then no, funds will not flow. Current asset to current liability, then also no, sorry, funds will not flow. Let us sum up. Let us come to funds flow. Funds flow means, now first we will see what is flow. Flow means it is nothing but it's a movement both inwards and outwards. Funds flow means it is something which is money value. Funds means which is money value, which can be cash or kind. And funds flow means funds which are coming into the business and going out of the business. Now our topic is funds flow statement. Now again, what is funds flow statement? Studies. 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 Now what fund flow statement studies? Fund flow statement studies financial position of an organization or business entity from beginning of the financial period and ending of the financial period. The financial position studies the financial position, okay, from the beginning of the financial period and ending of the financial period. Now, how? The question is how? We'll discuss about how how the funds flow statement is prepared. The funds flow statement is prepared in an aspect sources and applications. It is a statement which shows sources is nothing but how an organization is obtaining funds. That means sources. How an organization is obtaining funds, that is sources, and how organization is utilizing these funds or some funds in the organization, that is called applications. So preparing a statement which shows the sources of funds and applications of funds is called funds flow statement. Funds flow statement. Now what we are going to discuss, it means we have understood what are funds and what is flow and what is funds flow statement. Now the question is how to solve a funds flow statement. A funds flow statement is prepared in the following steps. In the step 1, we have to find out the changes in working capital. These are the steps to follow while we are preparing funds flow statement. In this, first we have to prepare the changes in working capital, and the second step is figuring out, I mean to say computation of funds from operations. In the step 2, we are going to find out only funds which are related to operations, which means which is the main source of the business, which are not relevant with the business or not considered, and the profit or the funds which are lost or which are funds from operations, we are going to find out in this step 2. And the step 3 is that finally preparing by consolidating everything, the step 1 and step 2 and the remaining things which are coming into the business or going out to the business, considering, that is what it is a statement. It is a statement of funds flow, which means a statement of sources and applications. In the step 1, we are going to find out the changes in working capital, how a change will be occur, which means the funds flow statement is nothing but it is an observation of the statements, financial statements in the beginning of the year and in the ending of the year. Now we are going to find out the statement of changes in working capital. Changes, I think changes can be written as delta. Delta is denoted for changes, isn't it? So now I am using delta. Changes in working capital. What does the statement consist of? The statement consists of, hey, one second, what is working capital? Current assets minus current liabilities. I think you people all know this. So again, now current assets minus current liabilities is our working capital. Now what we will do, changes from when to when? From beginning of the year, beginning and ending. We will discuss about the change, whether it has been increased or decreased. We will consider in this statement to get it easy done, to get the changes in working capital statement done easy, to do it in easy manner. First you just record whatever the items which are given in the balance sheet of for current assets here, and next current liabilities here, and just substitute that. so that you will understand a change, that is working capital, and you see whether it has been increased or decreased. Next, step 2. I'm going to talk about what we are going to do with this increase or decrease later. But now I'm just coming to the funds flow, funds from operations, for the statement of funds from operations. Step 2, which is funds from operations. Funds from operations. What this statement consists of and how? This statement in the beginning, it will have net profit as per books, so and so, so and so, so and so. Now add and less. These are the two columns we'll find here. Now for talking about what we have to add and what we have to less, first we should know the statement of profit and loss, P&L account, debit, credit, and by balancing here we'll have ANP, that is net profit, and we should know what are the items will come in P&L account. P&L account flow, we will have all kind of incomes and gains in credit side, all kinds of expenses and losses in debit side. But what we have to derive is only from operations, the profit which is arrived from only operations of the business, the operations of business. Now what we have to do, because of having some non-operating expenses here, the net profit will be reduced. That means it is not the profit which is out of operations. So when a non-operating expense has been debited, that means profit will be reduced. So what we have to do, we have to increase the profit, isn't it? To increase the profit, we are adding back here whatever the non-operating item which is already debited in P&L account, we are just bringing back to here from the funds flow statement, and we are adding back to the net profit arrived. So whatever the decreased profit here is increased again. Fine. In the same manner, we will have non-operating incomes. Because of that non-operating incomes, net profit will increase. Now what we have to do for that? We have to decrease. For that, what we are doing? Again, we are preparing a statement. In the very beginning, we are having a net profit which is arrived here. And what we are doing? A non-operating item which is increasing the net profit, we are deducting here by entering here. So let us sum up. Funds from operations, which means it will show the profit which is derived by operations of the business. Further, what we are doing is we are just taking the net profit arrived for the year end, and we are adding back the non-operating funds which were previously debited in P&L account, and we are deducting non-operating funds, in the sense like non-operating expenses and non-operating incomes which were previously added to the profit are now deducted here. By this means, we are finding out exact operating profit. The process of finding out the operating profit is called funds from operations. I think now you understood what is funds from operations. Now we'll discuss about the step 3 funds flow statement. Now we are going to discuss about the step 3, which is a statement of funds flow. To prepare a statement of funds flow, first of all we need to find the changes in working capital, whether it is increased or decreased, whether it is an increased working capital or decreased working capital. Next, we have to prepare the funds from operation, whether we got funds from operation or we lost funds from operations. We have to find out. And next, what we have to prepare? We have to prepare a funds flow statement which of funds. Suppose this is the balance. Beginning of the and ending. If in the beginning of the year a fixed asset in the beginning of the year fixed asset is suppose 10, while in the ending of the year the fixed asset is 15, which means something happened here. 5,000, 10, 15 minus 10, 5. What happened to this 5? We have invested to buy some fixed assets. When the fixed assets has been increased, that means we have used some funds to procure these fixed assets. So applications lo 5 వస్తుంది. That means we have to note in applications, that is by way of fixed assets 5 has been recorded. Suppose some other thing, fixed assets, which is plant and machinery, something like that. Think some fixed assets, plant and machinery. In the beginning of the year it is 10, while ending of the year it is 5. Again something 5 is missing. That means we have, let us assume, don't think this is a depreciation and all, so we'll assume that an asset has been sold out. That is the only reason asset has been decreased. How much asset is been sold out? For 5. So we have received funds, that is 5, by sale of fixed assets. By purchase we lost 5, by sale we received 5. And while considering liability side, see share capital. In the beginning it is 100, while in the ending of the financial period it is 120, and liability has been increased to 20. Which means again by way of liability we had something which is worth of 20, that is by capital issue. By capital issue we are having again 20, that is a source of income for us, sources. And long term liability, that is in the beginning of the year it is 50, while Ending of the year it is 20. That means 30. Liability has been decreased. That means we have paid liability. 30 rupees has been applicated. That means we have used. This is what sources of funds and application of funds. And don't ask me about current assets and current liabilities, because we have already found whether there is an increase or decrease in current assets and current liability. See, if beginning of the year and ending of the year working capital, think in the beginning of the year the working capital is 100, while ending of the year the working capital is 50. See, the working capital in the beginning of the year, working capital requirement in the beginning of the year is 100 and the ending is 50. That means working capital has been decreased, which means the working capital has been decreased means to the amount of 50 we have saved 50. That means we have again come back here. Sources, we don't need funds means we have funds in hand. We don't need that much amount now. That means we have sources, like we have saved back again. We have backed some amount back again. That means this 50 will come here. 50. That is net decrease in working capital. If suppose in the beginning it is 100 and while in the ending it is 110, that means we need 10 rupees additional. So again applications, we are bringing 10 rupees from somewhere, I mean to say like from the business. So if we need again 10 rupees, that means it is increased to 10. This 10 has been recorded in applications as we brought here. Now here one column is left, that is P&L. Long term liabilities over, current liabilities over, short term, long term and long term. Again fixed assets, current assets over. Now a thing which is left, that is P&L. P&L, we have found the profits from operations. If suppose we have funds from operations, that means we have income, isn't it? So again come to sources, funds from operations. If suppose funds lost, that means something has gone back again. We are recording here funds lost from operations. By summing up, we will be having balance here, like how much, like it is something like sources, that is funds, and again applications, that is what we used. So they should be equal in the year. And now coming up to this, like summing up what we are having in funds flow statement, sources and applications. Like funds from operations, if we lost, funds lost from operations. If we had a decreased working capital requirement, then decreased working capital. If we are having an increased working capital, increased working capital. And all the issues of long-term debts, sales of fixed assets. Here, if suppose we are paying back, that is redemption of long-term liabilities, and purchase of fixed assets. Now what is left? Payments. payments are left here. What are the payments? We are not, if we are coming back to the P&L account, operating and non-operating are here. Operating and non-operating are here in incomes. And operating and non-operating expenses are here in P&L. While computing funds from operations, we have only considered operating things. What about these things? If it is a non-operating payment, that is an expense, we are placing in applications non-operating payments. Non-operating payments means, for example, payment of dividends, payment of taxes, and other some non-operating payments. If it is a non-operating income, again we are placing in sources. What are non-operating incomes? That are receipts or dividends, etc. from our investments. So this is the story of funds flow statement. And this is a part 1 for funds flow statement. And I'm going to discuss this in part 2, how to solve this funds flow statement in an easy manner, and how to solve step by step by considering a problem, by solving a problem, and what are the steps we have to take and what are the key points while preparing funds flow statement. We are going to discuss all these things in part 2 of funds flow statement. Thanks for watching this, and I'm very sorry for this clumsiness. Hope you all people might understand a little bit of what is funds flow. And if I am wrong anywhere, please do suggest me, and please do just tell me, so that I'll just correct myself and correct this video even. And thank you very much in advance.